Hey everyone, welcome back to Corporate Dakota, the place where we peel back the layers of financial jargon to uncover the raw truth behind company moves. Get ready, because today we are diving deep into Federated Hermes Incorporated's latest quarterly report, a filing that might just surprise you with its hidden stories and financial maneuvers before. We dive in if you love getting straight answers from these dense corporate filings and want more clear, simple breakdowns. Make sure you are subscribed. We also have a thriving community on Discord linked in the description below, so come join the conversation. Alright, let's get straight to it. Federated Hermes released its quarterly report for the period ending the 30th of September 2025. And as always, we are going to focus on what really matters, the numbers and the story they tell us about the company's health and direction. First up, let's glance at the consolidated balance sheets. This tells us what the company owns and what it owes at a specific point in time. As of the 30th of September 2025, Federated Hermes reported total assets of over $2.1 billion. That is up from about $2 billion at the end of 2024. So overall growth there. One interesting line item is goodwill. Now, goodwill is basically an accounting term for the extra value a company pays for another business above its actual asset value. Think of it as the premium paid for brand name or customer loyalty as of the 30th of September 2025. Goodwill was around $860 million. This is a significant increase from about $804 million at the end of 2024. This jump suggests Federated Hermes made some strategic acquisitions in the period, adding value beyond just the physical assets of the acquired companies. On the other side of the balance sheet, we see liabilities. Total liabilities for Federated Hermes were $931 million as of the 30th of September 2025, which is slightly down from $933 million at the end of 2024. This indicates they are managing their debt and obligations effectively. Now, the really important part, shareholders' equity as of the 30th of September 2025 stands at a healthy $1.187 billion. This is up from about $1.095 billion at the end of 2024. This increase in equity is fantastic news for investors, as it signifies the company's value is growing. Moving on to the consolidated statements of income, which shows us how much money the company made and spent over a period for the 3 months ending the 30th of September 2025. Federated Hermes reported total revenue of $469 million. That is a solid increase from $408 million in the same period. Last year, this shows strong revenue growth year over year. Looking closer at revenue, we see that investment advisory fees from affiliates alone were $244 million for the 3-month period. This is a significant chunk of their income, and it shows the core business is performing well. Operating expenses for that same 3-month period were $339 million. This is up from $296 million in the prior year. The increase here is mainly driven by higher distribution costs and compensation costs. But even with those increased expenses, Federated Hermes saw its operating income rise to $129 million for the 3 months. Ended the 30th of September 2025, up from $111 million in the same period. Last year, this is a really positive sign, showing they are managing their operations efficiently and growing their profits. And the bottom line net income for the 3 months ended the 30th of September 2025 was $104 million, a noticeable jump from $87 million in the same period last year. Diluted earnings per share also improved to $1.34 from $1.06, which is great news for shareholders. Now let's look at the 9-month period ending the 30th of September 2025. Total revenue reached $1.317 billion, up from $1.207 billion in 2024. This sustained revenue growth across the year is impressive. Interestingly, total operating expenses for the 9-month period actually decreased slightly from $956 million in 2024 to $939 million in 2025. This is largely due to a significant drop in intangible asset-related expenses, which can be a bit technical, but essentially means some past costs related to acquired intangible assets are no longer impacting the bottom line as heavily. This combination of higher revenue and lower operating expenses led to a substantial increase in operating income, which almost doubled from $251 million to $378 million for the 9-month period. That is a huge jump. And the net income for the 9 months ended the 30th of September 2025 more than doubled to $296 million from $183 million in 2024. This dramatic improvement in profitability is the main story of this report. The consolidated statements of comprehensive income also paint a positive picture, showing that overall overall gains beyond just net income are also strong. We see some fluctuations here with foreign currency translation affecting comprehensive income, but the overall trend is positive. The consolidated statements of changes in equity show how the shareholders' equity has changed throughout the period. It reflects the net income, retained earnings, and treasury stock activities, which are all moving in a direction that increases shareholder value. Looking at the details, we see quite a bit of treasury stock activity, meaning the company has been buying back its own shares. This is often a sign that management believes the stock is undervalued and a way to return value to shareholders. Let's check out the consolidated statements of cash flows. This is where we see the actual cash moving in and out of the business. For the operating activities section, net cash provided was $136 million for the 9 months ended the 30th of September 2025. This is less than the previous year's $219 million, mainly due to some timing differences in cash flows related to investments and distribution expenses. Investing activities show a cash outflow of $12 million for the 9 months ended the 30th of September 2025. This is largely due to the acquisition of Rivington Energy Management Limited, which we will touch on more later. Financing activities show a net cash outflow of $139 million for the 9 months. Ended the 30th of September 2025. This is driven by treasury stock repurchases and dividend payments, which, as we noted, is a way to return value to shareholders. Now let's talk about that Rivington acquisition, which happened on the 7th of April 2025. Federated Hermes Limited acquired a 60% stake in a UK-based renewable energy business called Rivington Energy Management Limited. This move is all about accelerating growth in markets outside of the United States. They paid about $30 million up front, and there are potential future pay based on meeting certain revenue targets. The report mentions the valuation work is preliminary, but goodwill from this acquisition is around $44 million, and intangible assets like customer contracts added about $5 million. This acquisition is a strategic play indicating a diversification of their business and a push into new global markets. The revenue breakdown by asset class shows that money market assets are their biggest revenue driver, accounting for 52% of revenue during the 3-month period, followed by equity assets. This is consistent with their overall business strategy. The report also highlights concentration risk. This means they are heavily reliant on certain asset classes and offerings. For example, money market assets and equity assets are their main income sources. If these markets face significant downturns, it could heavily impact Federated Hermes. Interestingly, the Federated Hermes Government Obligations Fund represents a significant portion of their revenue strategy. This fund alone accounted for 17% of revenue in the 3-month period ending the 30th of September 2025. The section on consolidation explains how they bring other companies and funds into their financial statements. They use specific accounting rules to determine what needs to be fully included. They mention fee waivers, which are essentially discounts or reimbursements offered to funds to attract or retain assets for competitive reasons. This is common practice in the industry. Fair value measurements are crucial. They explain how assets and liabilities are valued based on market prices or internal models. Level 1 assets are the most straightforward, valued at quoted prices in active markets like publicly traded stocks. Future contingent consideration. Liabilities are liabilities that might have to be paid out in the future based on certain conditions being met. For example, after acquiring Rivington, there might be additional payments if they hit certain revenue targets. The reported amount of $11.8 million reflects the estimated fair value of these potential future payments. Federated Hermes also uses derivatives like foreign currency forward contracts to manage financial risks. This is a common practice for global companies to hedge against currency fluctuations. Let's look at their debt situation. They have unsecured senior notes totaling $350 million due in 2032 with a fixed interest rate of 3.29%. This is a long-term debt, and they were in compliance with all their loan covenants, meaning they are meeting their financial obligations. They also have a $350 million revolving credit facility, which means they can borrow money as needed for general corporate purposes like acquisitions and stock repurchases. Importantly, as of the 30th of September 2025, they had no outstanding borrowings on this facility, which shows they have strong liquidity. Federated Hermes uses share-based compensation, meaning some employees receive stock as part of their pay. This is a common strategy to align employee interests with those of shareholders. In terms of equity, Federated Hermes has share repurchase programs in place, meaning they are authorized to buy back their own stock from the market. As of the 30th of September 2025, they still had about 6.1 million shares available for repurchase. Under these programs, this shows a commitment to managing their capital efficiently and potentially returning value to shareholders. DARS. Earnings per common share increased to $1.34 per S-share for the 3 months, ended the 30th of September 2025 from $1.06. In the same period last year, this indicates improved profitability on a per S-share basis. Redeemable non-controlling interest in subsidiaries refers to the portion of ownership in certain subsidiaries that can be redeemed by the holders. This is a complex area of accounting, but the overall trend shows an increase indicating growth in these subsidiaries. The commitments and contingencies section is important. It covers things like potential legal claims or contractual obligations. Federated Hermes states they do not believe any current matters will result in a material loss, a good sign, for now. We already touched on the Rivington acquisition, but it is worth noting again, it is part of their strategy to expand globally and into new sectors like renewable energy. The report details a lot of current regulatory developments both in the US and internationally. This is a critical area for Federated Hermes as an investment management company. New regulations can significantly impact their business. The company is actively monitoring and engaging with regulators, which is a responsible approach. Noteworthy is the sexy shift towards deregulation and simplification of disclosure requirements. This could potentially reduce compliance burdens and costs for companies like Federated Hermes. There is also a legal challenge against a Texas law that aimed to regulate proxy advisory firms, which has been temporarily blocked. This highlights the ongoing legal and political landscape surrounding corporate governance and investment practices. An interesting development is the executive order encouraging the inclusion of alternative assets in 401 plans. This could open up new opportunities for companies like Federated Hermes to offer new investment products. Looking at asset highlights, total managed assets for Federated Hermes grew to $871 billion as of the 30th of September 2025, up from $800 billion in the prior year. This is a direct indicator of their business growth and market presence. Money market assets specifically saw a 10% increase, which is a really strong performance in the current economic climate. They offered a yield advantage in a falling interest rate environment. Equity assets also showed good growth with a 13% increase, this likely benefiting from market appreciation in the S&P 500. In terms of results of operations, revenue increased significantly across both the 3 and 9 month periods, driven by higher average money market and equity assets. This is a direct reflection of their asset growth. Distribution expense saw a notable increase, which is tied to their higher average money market fund assets. As money market funds grow, so do the costs associated with distributing them. Federated Hermes' effective tax rate has decreased, which is a positive for net income, primarily due to research and development credits and a shift in some foreign tax impacts. Finally, net income attributable to Federated Hermes Inc. for the 9 month period was $296 million, a massive leap from $183 million last year. Diluted earnings per share also rose substantially. This surge is driven by strong revenue growth, efficient expense management, and favorable tax adjustments. Now let us put on our investor hat and do a quick assessment. Federated Hermes appears to be in a strong growth phase. Their revenue is up significantly across the board. And even more impressively, their net income has seen huge gains, especially in the 9 month period. The key drivers seem to be their substantial money market and equity assets performing well and benefiting from market conditions. The strategic acquisition of Rivington Energy Management Limited signals an intent to diversify and expand globally, venturing into the growing renewable energy sector. Their strong liquidity position with ample cash and credit facilities means they can weather economic uncertainties and pursue further growth opportunities. However, it is not all smooth sailing. The report highlights concentration risk, meaning a significant portion of their revenue comes from a few key asset classes and specific funds. A major downturn in these areas could significantly impact their financial health. Also, while expenses are generally managed well, distribution costs are rising alongside their growing assets, which is a natural consequence of growth but still something to watch closely. The company is also heavily navigating a complex and evolving regulatory landscape, both domestically and internationally, which always carries inherent risks and compliance costs. Overall, Federated Hermes seems to be executing its strategy well, leveraging market opportunities and making smart acquisitions. The significant jump in profitability is a strong indicator of their operational strength. Alright, that is our deep dive into Federated Hermes Incorporated's latest filing. What are your thoughts on these results and what do they signal for the company's future? Let us hear it in the comments below. If you found this analysis valuable, hit that like button and subscribe for more straightforward insights from the world of corporate finance. And as always, check out the Discord community linked in the description for more discussions and analysis. Thanks for watching. See you next time.